costs.
Cornelia Meyer is back and to run through some of these stories, and we were just discussing there as Rico was chatting away, which is why we got caught a little bit short, about financial services, because there's scant detail there. There was, what, 3 paragraphs or so?
Yeah, and it's meaningful. It's ambitious and meaningful.
But what does that really mean?
Everything is ambitious. Well, we don't know, and that is a real problem, because if you look at not just financial services, the service sector in as part of GDP of last year, 2017, according to the Office of National Statistics, was 70.7% of GDP. That's huge. That's huge.
Yeah.
And yes, of course, in terms of exports, it's not that big, because we have all the car manufacturers who made their investments in order to export to the EU market. But you know, there is the upside is less in manufacturing. The upside for trade is more in the service sector. So yeah, it's huge. And the real problem there is, you know, losing the passporting rights, because that gives the City of London the right to clear euro-denominated transactions. Once we lose that, I mean, how are you going to settle for RBS to buy Deutsche Bank shares or something?
Okay, and so the deal, the draft deal document that we have seen, should anyone have read all 585 pages of it, you have. Well done, Cornelia. But you know, there, as you say, there hasn't been a huge amount of detail on it. But I mean, does it do enough to prevent banks and the like from carrying on with their contingency plans? You know, does it change?
No, it
anything?
doesn't. And if you talk to banks, if you talk, for instance, to the big European banks, let's say Deutsche Bank, you talked to them a year and a half ago in June last year, and they said, you know, the lady running the risk there said, I need to know, I have about so and so many hundreds of people and their families that I may have to relocate to Frankfurt. I need to know now. I can't do that overnight. You look at UBS, they've put a lot of their European trading now into Frankfurt. So, you know, Frankfurt and Paris, and to a lesser degree Dublin, they're making hay. They're making out like bandits.
Okay, and that's the thing, isn't it? It's about the money that is flowing within the UK economy, but also the money that flows into it from abroad. I mean, what is the rationale for investing in Britain at the moment?
Well, if you look at investing in Britain, foreign direct investment in Britain has plummeted, because a lot of people like Tata, you know, who own Land Rover, Jaguar Land Rover, yes, exactly. Like the Nissans of this world, they say, okay, before we put in more money, we need to know, can we still export? And when you look at the financial services sector, rather than investing in the UK, they said, okay, we won't get passporting rights, so let's move parts of our operations to Frankfurt, to Paris. So in terms of inward investing, Brexit has been bad. In terms of productivity, Brexit has been bad. In terms of exports, in the short run, it has been good because the pound has slid. So, you know, our goods, in the meantime, while we can still trade, have had a competitive advantage in Europe. But then there's another thing. There's, what are we going to do once the Brexit deal is done, in terms of having new arrangements with other countries? And I think we live a little bit in fairyland, because you look at it, Japan has just done a massive deal with the EU. They're not going to give us the same conditions, because, you know, if I have 27 countries, yeah, that's a bargaining power. One UK economy, with regard, as opposed to the 3rd largest economy in the world, not that big.
Okay, Cornelia, we're going to leave it there, but thank you very much for coming in and giving us your thoughts. Thank you.